Hey everyone, it's Nick with Us versus Herd. If it's your first time here and you're interested in the content, you like the content, hit subscribe if you want to get notifications for when we go live. Tap the bell. We go live 30 minutes after market close, Monday through Friday. We post videos on the weekends and other things like that. If you're interested in that content, you want to get notifications, tap the bell. We're getting started. We're getting started a little bit early today. Just trying to kick things off. Just excited, ready to go. If you're here right now, say what up. I see JCFC Drukpa. Man, I always struggle with that. PB, nice to see you, frequent. Jeff, what's going on? Early is good. Yeah, we're kicking it off early today, getting the stream popping. Alex, what's going on? Prodigy, what's going on? Yeah, I mean, I noticed like people come and go, especially people that like been watching for a long time. People come and they go, whether it's life or they just stop trading for a while, take a break. But definitely glad that you came back. I definitely appreciate everybody that's in this community that supports the stream and takes time out of their day, Monday through Friday to come hang out. I mean, you don't have to do that. It's a lot of time. Yo, what's going on, Francis? What's going on? Anyways, yeah, the market closed. The market closed green today, surprisingly. Flattish, but kind of coiled up here. If you're looking here at SPY. Yo, Keith, what's up? Yeah, and today the Fed minutes came out. Billy, what's going on? Garrett, everyone, people are coming in now. I probably started a little too early for you guys. Yeah, the Fed released their minutes today, and based on their meeting, when was their meeting? Like a couple weeks ago or a month ago? I don't even know. But anyways, it was nothing. There was no surprises there. Basically, what was in the meeting. I don't know why the market gets so crazy with the minutes when the meeting already took place and we already knew what was in the meeting. But either way, Oh, Brent got paid. If you made money today, comment got paid. If you lost money today, comment learned a lesson. What's going on, Alex? Andrew? China could be getting ready for a bull market. Guess we'll see. The one thing that I will say about China and their numbers is you don't know if they're always telling the truth. Like they could easily there's no one really to fact check numbers, and China could say they could have the greatest bull market ever, and then they open up all these ghost cities and stuff like that. I mean, it's tough. You can't always take them for their word. Portfolio didn't move hardly at all today. Collected a little theta, but that about it. Alex was selling some premium. Antonio got paid. Ring that bell. Today, I didn't really have many positions on. For me, I'm actually I'm up $40 per account today, which I would say is not great, but actually not terrible considering what I've been through. We're coming out of this thing live. We'll go through the trades in a second. Yo, T5, what's going on? Yeah, Green Day. We're making it through. And what I want to say is that yesterday I had a video about getting control of your portfolio. Sometimes you just need to reset. You need to clear the deck. And if you said, hey, January was a red month for me, and if I look at myself in December and say, hey, you adjusted in January and February to have gains the rest of the year, would you lose 1 month out of the year to have gains the rest of the year? I would say absolutely. Obviously, like when you're losing, when you've been losing for a week or two or a month or whatever the case is, if you're continually losing, you you kind of lose sight of when you can have your green day again, because like you've been losing so long. Like you just assume that you're going to have another red day, or you're just going to assume that it's kind of like when you just kind of like got to pull yourself out of that. You like take yourself out of the gutter, pull yourself up, and trade responsibly. Lower your position size, lower your risk. Instead of trading 5 positions, trade 1 or 2. Oh, Hafiz, new here. Welcome. Glad you're hanging out with us. So, I feel like in October and December we made a lot of money, and we made a lot of money last year, leading up to that. But then January came, and then the market pretty much halted, and we were playing the market like volatility was still there, but the volatility left. So you have to adjust. Instead of having 5 to 8 positions, you got to rock 1 to 2 right now. The opportunities are slim, and you got to be very specific on what positions you take. You got to be disciplined. You can't just go on there and trade like I'm going to go trade Microsoft and Tesla and all this stuff, and then like, hey, I actually lost. I lost on 4 out of the 5 trades. That's not good. Like you can't win. Your win rate has to be better than winning 4 out of 5. Your win rate has to be above 80% to be profitable. And the 20% that you do lose, you got to make sure that you manage your risk so that they don't blow out the winners. Like, just because you lost on 4 trades, don't load up on this other trade and you blow out the gains from your past. Like I know people, especially like in January, they blew out in 1 month. They blew out a whole year's worth of gains. Like it's insane. You just gotta take a step back and say, what am I doing? Like what's going on? Holding an iron condor. So I'm just being patient after a red week. Started selling high probability premium exclusively, much more limited. Yeah, when the market moves slow, Theta's going to be the winner. But let's go into these trades here. Let's get this screen up here. What we did here. And I'm going to talk about Walmart, and then I'll talk about SPY. Those are really my only trades last couple days. So let's pull up Walmart's chart here. Okay, we got Walmart's chart. So yesterday we went over this. I opened a Walmart strangle. They had earnings. Walmart, they had earnings. They went up to 105 pre-market, came back down. Looked like it was trying to get back up to like the 105 area. The high for the 52-week high is like 106. So I thought, with good earnings, and it seems to be moving pretty well, but at 104 it really just got stopped out there. So it was a bullish strangle. I had the 104 call and the 100 put, and I bought the first one. So I did this twice yesterday. I bought the first one for $1.30, and we talked about this yesterday, and it didn't really move all day, and premium just got obliterated. Premium in Walmart got destroyed. I then averaged down the same position. I bought another 100 put and a 104 call, but this time it cost me 52 cents. So the first one cost me $1.30, and then it cost me 52 cents. So I'm a $1.82. I'm a $1.82 in this thing right now. I have a $1.82 inside this Walmart trade based on these 2 trades. I would show you this. I would show you the this right here just to kind of show you guys. Tastyworks is saying I'm up $71 on the day. My realized gain is $64, but this is wrong. If you guys don't know, Tastyworks has a glitch where it's calculating the profit and loss and you realized incorrectly, versus like here, actually it doesn't show my realized. So we're gonna do the math. So I'm Harish. What's going on? Glad you're here. So I'm $1.82 in this thing. This morning, this thing just fell through. So remember, I had the 100 put, and it was testing 100. It just sliced down here. I actually cut it loose before it broke 100 because it went down so much. it went down so much, I thought we were bound to get a bounce, especially like at 100. So typically like at 100, you know, there's that psychological barrier. Obviously, this one cut below before trying to make a push back up to 100. But this broke below, hit 98.61, and you know, we could have made another $50 per contract on there, or 50 cents per contract. But you know, I sold them both for $1.84. So let's just do this right. I'm sorry, I didn't sell them for $1.84. I sold them for 84 cents. So 84 times 2. Oh man. So 168, and I was $1.82. 14 bucks. So the reason why I cut this, because it came back to even for me. You know, I lost $14 on it. Okay, but yesterday when I was down on the position, I was down like 80 bucks, 80, 90 bucks on this position, and it came back to near break even. That's why I went against me. Keep in mind, I had a bearish strangle, and it went against me, and my puts, my protection, they got triggered. So when the trade goes against me and I'm near break even and didn't go the direction that I wanted to go, and I'm near break even, I take the trade off. So I was managing my risk. I was trying to see, you know, when the trade goes against me, I don't want to get greedy, because this could have easily came back down to like 100 area, bounce up to 102, and I'd be losing more money. So, you know, it's best when you have a trade go against you, you come back to near break even, take the trade off, and you can realign it. You know, realign the trade if it's something you still believe in. So I got out of that, and then later today in Power Hour, I bought another strangle, a bullish strangle, because it looks like Walmart wants to bounce back. I bought the 100 call and the 96 put for protection for $1.31. But instead of this week, I pushed it out to March 1st next week on this one. And it just looks like it wants to kind of get above. So, you know, the idea for this one would be to kind of push to 102, back up to 102 for me. On Walmart, the delta on the 100s right now are 49 cents. So for every dollar it goes up 49 cents. So I'll probably make, you know, if it goes up $2, I'll make $100. You know, obviously delta will increase. I'll make more money as it gets in the money. So we'll see how that goes, but we'll manage the risk. You know, if I would like to not wait until next week to take this off. I would definitely like to take it off by Friday. Walmart, surprisingly, I don't typically trade Walmart, because typically Walmart's not a mover, and it's weird to say this, but in this market, it's just confirmation that you really need to focus on the market. Even though Walmart went against me, in this market, because the stock was moving, I was able to get out with a very, very small loss compared to $90 yesterday. I got out without a $14 loss today, and I was able to redeploy that capital and put on another position in Walmart because it's been moving. I mean, it went from 96 up to 105, back down to 90, 98-ish today, and now it's almost testing 100. So, you know, that's what I was looking for. And in this market, you know, like I was saying yesterday, we really need to be disciplined and trade the movers. Don't just put a trade on like on CVS today. CVS dropped 8% on their earnings. But so if you guys are new here and you don't know, let's see here, who else was here? Sergio, what's going on? Rock and rolls, hating the market. I got into options videos. Z, thanks. What's up? Daniel, how you doing? You know, if you guys know, I don't like to trade through earnings. If you're new here, I don't like to trade through earnings. I like to trade pre-earnings and then after earnings, before earnings and then after earnings. And CVS had earnings. I've traded them before in the past, and you know, I've had some decent success with CVS. But they moved 8%, but everything was pre-market. So I was looking for a trade of the day, but it really bounced $1 up and down. Like you can't make money in options like that unless you time it exactly perfect. But anybody here knows, like, you can't time the market perfectly. You can't time what's going on. Um, sorry, guys. My phone's blowing up here. So, you know, you want to trade something more like in this market, more like Walmart, where we're you know, it dropped a couple percent and then it's moving. And then like CVS, you don't want to trade. You don't want to trade this chart. You just don't. And then going into SPY today was my other trades. Hafiz IQ earnings tomorrow. We could take a look at that. Let me get through. So kind of the structure, if you're new here, seems to be like a lot of new people here right now. The structure, kind of what I do is I go over my trades first. It's kind of what people have preferred in the past is I'll go over my trades that I did for the day, kind of how it went, and then I'll take requests to look at different trades and, you know, what we think that will happen with them and that kind of thing. So Hafiz, I'll note it. Let me get through SPY, and then we'll look at IQ, and then we'll talk about some other stuff. Whatever you guys want to talk about. So, SPY, I put a position on yesterday. I bought the 278.50 call, and I didn't necessarily time it right. Let's zero in on this. So I bought it for 47 cents, and what I was hoping for was a sell-off, and we got the sell-off, but I put it on too early. I said I should have waited till the market closed because you could trade SPY 15 minutes after the market closes, then buy a call. And I've done that in the past, and I've had some good success with it. For some reason, I felt the need to catch this knife yesterday. So if you guys were trading this, I know a lot of you guys were. I felt the need to catch this knife yesterday, and I got in at like 278.07 area, 278.06, I think. And it came all the way down to 277.72, like it closed below 278 yesterday. And, you know, would have been way better to get option pricing afterwards. No worries, Tan. You can always hit the rewind. We're here for you. So what I was hoping for was I was gonna put a call on SPY. Then if we can kind of gap up this morning, I would have, you know, a nice trade, you know, 50% winner, maybe 75% winner, something like that. Because I had a bad entry, you know, we went up, but it wasn't going so well. So I averaged down at 10.50 today for 33 cents. So my original trade was 47 cents. I then averaged down for 33 cents and I cut it for 17 cents, and they expired today. So not a great trade. I mean, it was a low risk trade. Wasn't a great trade on my part. And you know, I was at the car dealership all day, and I probably shouldn't have left the dealership while the Fed minutes were out. So yeah. Anyways, but you know, you can't blame it. You know, I'm not blaming the market. I'm blaming it on myself, and you know, that's not an excuse. Definitely should have been more responsible with this, and I just didn't. I guess I just didn't take the trade seriously because I thought that nothing was gonna really happen to it. But that was wrong of me to do that, because the 285 calls. Let's look up SPY here, that I was trading on today. No, I had the wait. 278. I had the 278.50. Sorry, I didn't have the 285s. What are you talking about? 278.50. So let's look at. Let's dive into. Let's talk. I was just getting repairs on my car. I wasn't getting a new one. I was about to say that about Keith. Yeah, I guess if you have a Tesla, I think they come to you for the repairs. You don't go to them, so that's kind of nice. But anyways, so the let's see here. Sorry, guys. Alex, yes, I have. Yes, I have had them assigned. So the option pricing really was bouncing between 20 cents and 40 cents all day until we had this major breakdown. But then, the dip got bought before the Fed meeting. So we had this breakdown. And when I say it was a major breakdown, this is a very small dip in this. When you're in a bullish market when these little dips get bought. And this dip was, like not even $1. Like we used to have dips that were like $1, $2 that were like crazy. Now we're getting dips that are like 40 cents, 30 cents. 50 cents. This dip was actually on the larger side, it dropped about 80 cents, which not bad, 80, 90 cents almost. Not bad for a dip in this type of bullish market, right? And the Fed minutes came out and I was in the car and I should have executed. I had the 278.50s. These went up to 60 cents. You can see here these went up to 60 cents when it spiked up to here to 278.93. I could have exited for what was my average on those then? So my average was about 40 cents, okay? My average is about 40 cents. I could have exited for like a 50% winner or like a 40% winner. Let's say you didn't hit it correctly, you didn't hit it. 40% winner is not bad. 50% winner, and it was expiring today. These options were expiring today, so it was definitely a bit sloppy of me to not do that. Anyways, the only way that you could have got out of this trade profitable with my position is if you bought this dip down here. So when it came down, like it went high and then it went fall. This would have been pretty risky though. Like if you bought down in here, like 277.26, 277.40 area, you could have bought like 3 more contracts for like 6 cents, 7 cents. You could have bought 3 to 4 more contracts to kind of even that out. And then when it bounced up, you could have let it go. So you could have had a chance to redeem yourself. But the reason why I didn't do that is because I really didn't want to allocate more capital into this. So it turned out to be like a $40 loser for me. But I didn't want to allocate more capital because, like, let's say, looking at this chart here, what if it sold off and came down to 276.50? Then you'd be at max loss. And in this market, I've noticed that averaging down too much and being too aggressive with the average down, you don't necessarily win all the time. In this case, it would have worked, but in this market, I've definitely noticed that has not been a winning strategy. Like when you start averaging down, it takes so long to get back to where you were. Theta just crushes you. In this case, it moved down and up really fast, so it would have worked. But based on my experience over the last 6 weeks, 7 weeks, averaging down like more than one time hasn't paid off. Yeah, prices move too quickly at release time. Hard to get a good close, yeah. When do you think you'll start making puts on the SPY? Tan, I don't know, man. To be honest, we got to retest the 280, 281 area on SPY. It's going to be interesting here to see if we can kind of coast above this. If we can get above, it's hard to say. Why would it never average down? Why would you not average down? Me averaging down on a lot of trades, especially Walmart, my Walmart strangle, is what caused me to get out of that break even. Averaging down is a good defense mechanism, but you have to understand when to stop. You can't just average down just to average down, because you could average down and those go, you could average down a bunch of times and then it goes worthless. So you have to understand, you have to set reasonable expectations when averaging down and have a specific goal in mind and concentrate on the option pricing. NVIDIA is on fire. Add more. Nice. So, Tan, to get back to you, have you ever made a video on a put credit spread? Yes, I do have that. Search Robinhood, search Us versus Herd, put credit spread. I'm sure you'll pull up. Rich, I know you were you were clenching your cheeks there for a while. Did you come out green? Ben, I did average down EA puts as well too early. EA broke down the day. Yeah. Sometimes averaging down works, sometimes it doesn't. And I just know, like, averaging down for me works. But in this slow moving market, averaging down, you can't be too aggressive with it. Like, you can't just average down just to average down. You have to have a reasonable expectation. Still down 1,200. Well, hopefully you can recover that. So let's go into IQ. Hafiz, if you're still here, let's talk about IQ. So this is another Chinese stock. If you guys are not familiar with IQ, they're another Chinese stock. What I will say, I'll say it again, you got to be very careful about the Chinese stocks like Baba, Baidu, IQ. Did Baidu report already? No, not yet. Or did they? Is it today? No. I guess Baidu is supposed to report, which should be very interesting. You have to be very careful with the Chinese stocks because they're not fairly valued right now with the trade war. So even if they crush it, even if they're like amazing, they're most likely going to be bogged down until there's a resolution with this trade war. And I don't know, nobody knows when that's going to happen. They've been teasing us for 4 months, 5 months already, saying, you know, talks with China resumes, talks with China seem good, and then Trump tweets whatever he wants to tweet about it. Doesn't mean it's true, doesn't mean it's going to happen. And so far, nothing has been set in stone. So, you know, Chinese stocks are definitely very hard. Even if they have great earnings, I feel like they're not going to be valued appropriately. But, you know, right at these levels, you know, it has made great strides from 14 up to 22. There's no reason for it to keep going, but you have to understand that if you're trading IQ, you got to do it like far out, like 3 weeks or a month out, because look how slow it moves. I mean, it's just you'll get bled out. And let's see here, earnings. Yeah, I would probably wait till after earnings and see what happens, you know. Let's look at Nvidia. If you're new here, say what up. Want to meet you. If you're not new here and you haven't said hi, say hi. Nvidia, Rich is still, we talked about this a couple days ago, still knocking on 160's door here. Can't get over. It just can't get over. We need, you know, it tried but failed. You know, we need to get to like the 160, like the 165 range again. Boss, what up? You know, I feel like Nvidia will get back up there possibly, but it just may be very slow. Which, if you're holding calls, you know, I would probably hedge them if you can afford it. You know, for me, if I was holding like, let's say the 160 calls, and you know 160's resistance, you know, it gets kind of risky. You know, for me, like for that's why I'm saying 165 coming. Well, to get to 165, you need to get through 160 first, right? So 160 has been trouble for these guys. You got 315. So if you have, let's say you have the 165s, and we're having some trouble here. You know, you might want to. Let's see here. What would be a good price for some puts here? You know, like the 150s maybe. You may want to, let's say you have the 165 calls and you think it's going to go up there. You know, you could say, let's say you had like 3 of these. You can buy just one. You could just buy one put just to kind of help you out there. If it does retrace to 150 and then goes below to like 145, you should be okay. And then you can average down your put if you want, or you know whatever. But I think this is really risky due to 160 having such a barrier here and just getting smacked down. I definitely think that it could return up there, but it needs some sort of reason to get up there. I mean, it had a good week, went from 146 to you know, 158 right now, 161 today. You know, reached a high of 168, but that was earnings. So, you know, right now, what's been helping Nvidia is that it's had the market behind them. So, you know, the market has had momentum. The market, you know, SPY, if you're looking at it here, you know, the market went from 272 to 278, and stocks do better when the market is behind them, right? So like when the major indexes are behind them, and when you're moving, like, you know, when you're riding a bike, you move faster when the wind is to your back, right? And that's what's happening with NVIDIA right now. The wind is to NVIDIA's back. It's pushing NVIDIA. Even if NVIDIA doesn't really have a catalyst or anything, it's kind of moving with the market, right? You know, it's going to push it. It's the market, as it moves higher, it's going to push it up a little higher. So hopefully, I mean, it reached 161. Probably thought it was going to break out, but it just pretty impressive with the sell-off. And then these lower, the lows were getting lower here. So the lows get lower here. But, you know, it held up pretty good for the most part. You know, closed green, so I guess that's good. Rich, I think you know what I mean. I'm not saying, I'm just talking in general. C. Hutch, thoughts on EA? Josh, I don't know if I said hi. Welcome. Let's see, EA. So EA is a tough trade. I was actually shorting EA, but it was a little bit too early. You know, they went up based on hype on Apex Legends. You know, what makes it a harder trade? Actually, I'll pull up Tastyworks so you guys can see. Okay. You know, for this week, you know, what makes it a little bit of a harder trade, especially when doing like strangles or you're doing put spreads or anything like that without doing anything. You know, the bid and the ask on these are kind of wide, even though they have volume. So I was trading them on volume, but it made it a little bit harder, especially with like a strangle. You know, the bid and the ask on these are kind of wide. You know, 10, 11 cents, 12 cents. You know, is a bit wide. You know, especially in the money, like these 98s here, 207 bid, 220 ask. 97 in the money calls here, 263, and then 279 ask. I mean, it gets 90, and then it gets a little tricky. So you have to make sure you just play at the pricing. But I think that for EA it was just artificial hype, and now this maybe I'll get into a trade now that it's breaking down under 100. The one thing that I will say is that these, you know, I think that'll return down to like the 90 range, back to the means here. But the option pricing, let's look at next week. I'm very hesitant to put on anything this week in case they slow down. It's just really expensive for these options here. It's expecting a $5 move. You know, these are 261. If it decides not to move, you just got to be careful with it. You know, I would say these are pretty expensive, but it may be worth the risk. I mean, coming down from, you know, 110 down to 98 in 2 days, that's actually, you know, that's really good. I haven't been watching it, which I probably should have, but, you know, the stock has definitely been moving, you know, especially after this break, after 101, after this 101 break here, just cracked today. You know, no one knows how to evaluate the Apex Legends is because they don't know how much money they're going to make from it, and that's not going to show up until like the quarterly returns. Also, I don't really know how it works because EA didn't develop the game; they distributed the game. So I don't know how much money they have to split with the developer and all that stuff. I don't know. I'm not sure. I mean, a lot of people here are day traders. A lot of people in our group are day traders. My preferred method is to swing trade. I do day trades every now and then, but only when the opportunities really present itself. Like day trading is definitely a lot harder than swing trading. You know, it depends if you like to babysit your positions, and generally I don't like to babysit my positions. I like to put my positions on, and I like to do other things, you know, like make these videos and you know, eat lunch. I don't want to be having to babysit and sweating over a position and I can't eat lunch, you know. CVS, I don't know. CVS is a very slow mover. If you haven't traded it before, you just got to give it time, because now that it came back down in here, I don't know if it can get out. It could move between 64 and 66 for a long time, like it has been. You know, broke out pre-earnings. You know, you're pretty much on a chart like this, you have to trade the breakout, so or the rip down. So like if it breaks up above 66, you know, it would be a good trade. Up here, good trade. And then if it broke below 64, it would probably be a good trade. Here it seems to be wanting to go on the bullish side once it gets down to this level. But it looks like it just wants to return there. You know, back in January, it pushed up above, then came back down, and then recently pushed up above, and then earnings brought it back down. I guess I didn't look into their earnings. I don't know what the catalyst. I don't know what their guidance was for this year. Definitely look into what their guidance was for 2019. Are they expecting numbers to grow, be the same, or slow down? Rob got paid today. Nice. T5's a swinger. Ron, I would suggest sticking your toe in the water 10 shares. Then if it goes down with 10 bottom, I think you guys are having some sidebar combos. They didn't meet. Shreep, but you got to look at guidance. So just because it didn't meet, just because they didn't beat expectations this quarter. So when you're investing in a company, you're investing for the future. You're not investing in what they did last week, last year, last quarter. You're investing how they're doing next quarter, next year, next 5 years. So if they're gonna say, hey, 2019 guidance, it's gonna stall out. We're not gonna grow in 2019, or we're expected not to grow. That's when you're gonna have a problem. You're gonna have a problem. If they missed earnings and they said, hey, but outlook for the rest of the year, we got this stuff rolling out, we're doing this, we're expected to grow 50%, 25%, then, you know, you could, that's a different story. Roku looks like it's just, Roku has earnings coming up, right? Roku, yeah, they got earnings tomorrow. And it looks just like a pre-earnings run up. So I think that after earnings come out, I might look at a trade here depending on how it went here. But pretty crazy run from 26 to 53 in 2 months. I mean, that's nuts. Less than 2 months. What do you think of JD? JD, like kind of all the like JD was kind of like if you were here for the combo with IQ, kind of in the same boat. You know, with the Chinese stocks, you got to be very careful with the Chinese stocks right now. They're not being traded fairly. Their valuations aren't caught up with what's going on right now, mainly because they're caught up in politics, you know, and this is a very slow grind. Like, you know, there's probably better opportunities for you. I mean, you're probably better off trading like GE or something, even though GE's kind of stalled out around here. You know, I would definitely trade GE over JD for sure, even though it's kind of stopped at 10 here. So, you know, if you're going to put a trade on GE, you're going to put one on for like 3 weeks out just because it's you know, basically a single-digit stock and it's just not moving right now. However, volatility has definitely decreased, so you can get some good option pricing in there. PGE. PCG I kind of wrote off because I just didn't understand. I didn't understand how they're going to turn things around. But apparently their stock's going up. You know, they're going to file bankruptcy. You know, I don't know why PCG, the stock, you know, they said that they went from 25 down to 5 because they said, hey, we might be filing for bankruptcy. And then when they finally file for bankruptcy, they're actually moving higher. So I don't know, man. Roku, next week is Roku. No, Roku I think is, we'll double check that. Roku, let's check Tastyworks. Yeah, Roku's the 21st after market close. So check. It's always best when you're not sure to check because earnings dates do change. Check multiple platforms. Check their website to be sure because a lot of times the platforms don't update it. Like if Roku changed their earnings date, which does happen with like Tesla and other people recently, if they change their earnings date, the platforms may not catch up to that. A lot of hedge fund, yeah. PCG is like 88% institutional owned and stuff like that. So you don't want to, you know, you're not going to want to mess with their money. So I guess the trade would be to go long here. You know, even though it doesn't feel right, but it looks like it wants to close some gaps here, make a run to 25. So maybe, you know, let's see here. What's it moving here? Yeah, it went from 14 to 18. Definitely is moving. I'm just wondering if it's going to stall out anytime soon. If you put a position on right now, you may get eaten up. Let's look up PCG. They're saying February 28th is their earnings. So, I mean, if you want, I mean, for me, I'm big on Strangles and option pricing and trying to figure out what it was. So if you're bullish on it, you could do something like that. You know, pay 70 cents, do or you can do pay $1. You know, if you want to get the higher deltas, you know, if you want to get the higher deltas, if you want to be bullish on it, buy the 18, get the 15 per protection for March 1st. That is if you want to trade earnings. That's actually a pretty cheap earnings. But let's see, what are these? Yeah, again, the one thing that I would be concerned about is the bid and the ask spread. Just know that you got to be very careful about this. Not a lot of volume on these. You know, there's only 40 on the 15s. There's 500 on the 17s, but you know, there's a 10-cent difference here, which makes it, you know, it's like a 25% difference here. So, you know, you got to be careful about these here. PCG. Let's see if there's what has better volume here. Yeah, this week's volume is okay. The monthlies seem to have better volume, so these 23 days out have better volume, so you might be better off trading something like this. So, you know, kind of play with the option pricing. So if you looked at this, let's say for March 1st, let's say I put this on, same 19 call and the 15 put. Oops, let's take in the other one. 19 call and the 15 put. You know, here it's 70 cents for 9 days out. And then if you go to 23 days out, trade the monthlies, 19 call, 15 put, it's $1.22. So, you know, for 20 cents more, you could push it out a couple more weeks. This would probably be more ideal trade for me to put on. You know, that way, if you are wrong, you have a lot of time. You know, you got 23 days to be right versus 9. If it doesn't move up, and then if it's moving back down, it has time for your put to be triggered. So, you know, you got to play, like, don't just, like, when I'm trading options, you just don't put on anything. You kind of got to look around, like, slow it down. If you're looking at a trade, especially in this market, you got to be very careful with what you're trading. Just don't go in there and trade anything. Like, you know, for 9 days out, this is actually 70 cents. So you're actually paying 50 cents more, but it's still a pretty good trade. This is let's go up one. Yeah, $1.22. So you're actually, and what was the, okay, it's actually $1.67. So it's actually 50-cent difference, not 20-cent difference, because I was doing the 19. So we can, yeah, for 9 days out, 70 cents, and then for 23 days out, $1.22. I think I would probably would rather have the $1.22 one than the 70 cents one. JP, what's going on? Do you care about spreads in a ticker with options if a stock is trading with a 30-cent spread? No, I don't care about what the stock spread is. I just care about what the option spread is. My PCG puts are worth 5 cents. Sorry, Ben. Yeah, BA. Yo, Scott, what's going on? Glad you're here. BA has been unstoppable. I mean, just insane. 405, 421, and it just keeps pushing these highs. And this is a stock, you know, this is a very common chart. Like in 2017, once a stock broke those 52-week highs, it would continually doing it. It would be continually doing it. Like for Boeing, you just have to be sure. You have to be sure that you want to put the trade on, just because it's a higher price stock. Let's see what these were trading for this week. Now, there's not that much time in this week, but if you're looking here, they trade in $2.50 wide strikes here. You know, I would probably want to do something like this. But Boeing is slow. Boeing is slow, so you want to give yourself more time. Like for me, when I've traded Boeing in the past, I don't want to do like 10 days out, 16 days out, just to be safe. You know, you don't want to play with Boeing because, you know, on days like, if you look like today, Boeing moved, you know, went from 416 to 421. But on days like in here, it literally went nowhere. It went from 407 and it closed at 410. It went from 407 and it closed at 410 and it didn't do anything. It took a couple days of consolidation. So like in the bullish market, you know, consolidation days are your friend. Here it made a big up move. Here it made a big up move on Friday. And then yesterday had a consolidation day. Would have been a good day to put a position on. And then today it moved. So it looks like Boeing, you want to play those consolidation days. Nothing good. Lost a lot of money. Sorry to hear, JP. They could see 452 before April, May. Yeah, definitely, Andrew. What is really the benefit of trading an iron condor over put credit spread? So you can reduce your risk. It depends. If you don't think the stock's going to move a lot, so there's different things to do here. You know, let's just look at Apple. We can look at Apple here. We'll do next week just to be safe. So if you wanted to like lower your risk, let's say, you know, I wanted to sell like a 1 standard deviation put. You can see my max profit here is $32, but my max loss is $218, which is like not very good. If you add it aside here, you're reducing, you know, your max profit's increasing and you're reducing your max loss. You know, it can only go one way. However, your risk is if it runs over one or the other. You know, and that's if you want to be further out in the money. You know, if you want to do something more like this, like a put spread, you know, max profit is $104, max loss is $146. But what I would say is Apple actually does not look good for selling premium at all because it's, I mean, the Ivy rank's 11. You got to be very close here. If any volatility hits, you're dead. You know, you want to pick something that has more volatility. We can see if they have something in the where's your, let's see here, let's see here, where is the, I want to go to, let's look up. So Disney, like, yeah, I mean, it's just hard. Netflix, and in a low IV market, you're probably wanting to sell something in a higher price stock like Netflix or something to get a little bit better pricing. However, it does move a lot more. You know, something like that. But when you're selling premium in this type of market, you have to get within the expected move for your risk reward ratio to be somewhat worth it. JP, I don't think we went over EA a little bit ago. I don't think it's a good idea. I think if you could put a call on it, if it comes back down to the $90 range, and right now it's coming down. Barron Square. Yeah, Square bounced off this 75 again today, which is interesting. It's just the 1 year chart's been slow grinding up. You know, when did they have earnings? You know, I think Square, it's usually a good like pre-earnings run up kind of stock, because I mean last quarter it ran up pretty nice when it was kind of flat. It ran up. You know, if it's kind of flat now, we can maybe see it run up to 80, 85 before earnings, and then we can trade it afterwards. Is 4 hour charts best for swing trading options? The chart that works best for me is I use the 15-minute chart, and then I compare it with the 1-year chart to kind of to spot support and resistance. Zach, no problem. I've been making decent calls on Apple within the last few weeks, struggling with GS and BAC this week. Yeah, GS, the banks have been kind of moving their own way, and it's going to be hard when it comes up to here. I was actually looking to put a short position on once it got to 198, but it broke through 198 yesterday. It was going up, and now it seems to be stopping. So I don't know where it wants to go, because even though the market's green, the banks have been red for some reason a lot of the time. So, I was looking at GS. GS is a stock that I've been trading pretty consistently, and it seems to be making lower highs in here. It just seems to be moving slow. So I think that 198 is definitely an issue. I might still look into a trade there, but you got to make sure the risk to it's very easy in GS to overpay for options. So you got to make sure you get a good deal. Brent, HOLX. Yeah, so for HOLX, the one thing that I'd say is they only have monthly options, and the volume is like not very good. So I would probably just pass on this. These calls only got 62 volume. There's only like 100 volume here all day on all these combined. The puts aren't very good. There's only like 50 volume on these combined. It's gonna be tough. It's gonna be a tough trade. I mean, the chart looks good. It keeps breaking 52-week highs, and it's pretty volatile. It looks like volatility is there, but I think it'd be a tough trade for an options trader. You might be able to get through to something. I mean, if you're going to do something, pick a strike that has volume, and you'd probably want to stick to in the money. Just know that when bid and asks are like this wide, you're going to be leaving some money on the table versus a liquid stock. Banks are waiting for Fed hikes. Yeah, California, I think they said that they're going to pause on that just because it created so many issues. They're pausing the hikes. Groupon, Francis. And Groupon, I haven't looked at the stock. I haven't looked at the stock in a while. And it just seems to be, it looks like it wants to revisit 3. I typically don't trade stocks under $10, mainly because my win rate on them isn't as high as higher price stocks. So, in terms of Groupon, they do have some volume on some of these, but they're not that liquid. Let's see what the monthlies are. The monthlies. Yeah, it's tough. It's tough, man. With the ask 5 cents, the bid 1 cent, and the puts. It's tough. If you're gonna do something, it'd be like in the money. But I think there's probably better. You're probably better off trading GE or something. How do you get that volume option indicator? So if you're looking at if you have on Thinkorswim, to get the options, you click on layout up here. You click on layout, and then you go to customize, and then you can look up items, and then let's say it's in here. Let's say you look up volume. You look up volume, which you already have, and then you select it, and you click on add item, and then you can rearrange these columns, and these columns reflect here. See, we got the last price, net change, percent change, volume, same thing here. On Tastyworks, if you want volume, you have to click on these like circles. You can only change these, like the bid and ask you can't change. In the money, percent and volume, you can change. Like you click on this, and then you can select which one you want here. If by default, I don't think it's set to volume. I think it's set to something else, so you can change it. If you don't want in the money, you want out of the money or something, you could change it there too. So. This is displaying volume, but you can change these columns right here on Tastyworks as well. So Kawsar, I hope that helps you out. Anthem drops for EA Friday, put a vertical put spread. Well, hopefully Anthem does them right. Roku after earnings. Yeah, I'll be looking at Boss. I'll be looking at Roku after earnings. I've had a position on AGI as a hedge, but it's been doing very well. Do you mind taking a look? Been holding 1,000 shares of AGI. And yeah, I would say though we're coming up on resistance. If it can break through, if it can break through 5, I mean I don't follow this stock or know anything about it. You know, just based on the chart. You know, if there's a catalyst that could push them up here, because this is where it had the major breakdown into, you know, set it back down to 290. Obviously, the market conditions didn't help in October that's when we had the major market sell-off. Looked like it wanted to make a push for the higher 5s or 6s, but you know, I would be mindful of this area right here. Does that orange line in Tastyworks separate the in the money and out of the money? Yeah, so if you're looking at Tastyworks, you can see here, it's kind of small on my screen for you, but it says ITM and it's an arrow pointing down, so that means these are in the money on the put side, and then the calls, it says ITM and the arrow is pointing up, and that means these are in the money here. The orange line in the middle, the orange bar in the middle, that's the expected move for the week. So that's what the options are pricing in for the expected move, plus or minus $6. Josh, I had a dip for a few minutes. Did you take a look at good old Snap? No, we did not. Snap has been doing well. It's just been a slow grinder. I think Snap is actually going to make a push above 10 soon. You know, they had a good earnings report, good outlook for 2019. So I think it could make a push. It just needs some volume, and volume is low. It's just kind of going low. We need some momentum. As you can see here, when it had this huge gap up on the earnings, you know, volume was over 100 million, and it's just been decreasing. And that's the other problem with the slow market that we're in. We're in a slow market right now because the volume is decreasing. And we're just slow grinding our way up. So volatility is down, but also volume is down. So not as many people are trading, or robots, or whatever contributes to the volume. People, algos, robots, whatever. There's less volume, less transactions taking place right now. Yep, no problems. Anyways, we're coming up in an hour. So if you're new here and you like the content, hit the like button. If you want to hit subscribe, do it. I have links below to our free option trading group along with our Discord if you want to get involved with the UVH fam. We have a great community. There's great people here. We all just want to help each other learn and grow. You know, that's what this community is about. You know, it doesn't matter how smart you are. It doesn't matter if you're new. It doesn't matter if you're an experienced trader. You know, we're all in the same boat, just trying to make some money in the market. So if you want to join, the links are below. If you guys want to subscribe, I would appreciate it. You know, if you like the content. But you guys have a good rest of your day. Stay safe, stay green. It's always us versus herd.